It's a team member.
Hey everybody, happy Tuesday. How we doing? Welcome back to another live session. Trades are off and running. Let's see how things are doing. I've got a little SPX trade going on this morning. This little red candle would be nice to get this thing recentered so I can grab some profit. Trade I took yesterday, TSM's looking a little bit better. I want to take a look at this one this morning with everybody. We have about $11 of, we took in $12 of credit. It's trading for like $11 right now. I may end up taking, you got to be kidding me. It's back to break even. Shoot, I saw this as low as like, $10.90, $11. I'm like, well, I'll take a look at it. Let me replace this trade. So right now the mid price is 11.65, the bid 11.66. I put in a debit at $10. I updated in the Pulver Alert section in the A1 Trading Discord. So I'm trying to get filled for $10 or lower. What I want to see price do on TSM, this might take another day or so, but if this price ends up falling, so it's just looking to see there's our close prior to earnings. So if we come back into this area at all, it's like price could certainly come back a little bit more and kind of recenter. So if price gets to like 198, 197, then we should be okay to get this thing knocked out for a $10 debit, which gives us $2 per contract. And I'm okay with that. So let me move this up to 197. And see if we can get to today's low or slightly lower, and I'll see what that thing is trading for. So I'll set a chart alarm, kind of near the center. So I sold the 187 call and I sold the 190 put. So basically within this like 190 to 187 area, that's my center price. And then $12 above that, I'm trying to get this thing kind of safely below $200. And we're trading at 199.18 right now. So I need this to drop another maybe dollar or so in order to get my profit out of this. So I will tolerate like an $11 debit, which gives us about $1 per contract. But ideally, I'd like to get a $10, which is what my profit target is set at. So TSM is still marinating for this week. UPS put in a fresh trade yesterday. I bought the 131 and I sold the 132. I paid 50 cents for it. And earnings is coming out tomorrow or Thursday morning. We had some earnings this week, some good, some bad. Let me spot check so Verizon came out this morning, 3M, GM, Raytheon, Freeport McMoran, Lockheed Martin, Philip Morris International, Sherwin-Williams. Those are some notables today. Aftermarket today, we have Texas Instruments, Baker Hughes, Seagate. Tomorrow's a big one. Tomorrow we've got Boeing, AT&T, Coca-Cola. Let me take a look at Coca-Cola. Good old Coca-Cola. Oh, I don't mind a little Coca-Cola. I mean, after having a bit of a pullback, let me see what this one's going to charge. I'm going to take a trade on Coca-Cola, I think. I thought hurricane season was over. I think I said that last week. I think I mentioned that on Friday. I was trying to think of what the word was. Anyway, let's go to Coca-Cola. As long as this is a cost-effective bull call spread, I'm going to take a look at this one for earnings. So I don't expect Coca-Cola to make a big pop during earnings. It's certainly like a lower beta stock. We're trading at 0.06, so it's a very low correlated stock. Solid dividend. This has been, Buffett's longtime favorite. That's fine. Let me check in my SPX trade really quickly. Looks like price is cooperating. So $1.50. All right. Looking to see if price comes back down to my center price. Looking better. KO. So we've had a bit of a pullback in this one. So here's what I'll probably end up doing. We're at a 5.77% pullback on Coca-Cola. There's some good structure support here. All I'm looking for is if I go up to this week, Coca-Cola earnings is tomorrow morning. I can either do like a Friday push and have the expiration for the 25th, which is Friday, right? 25th is Friday. Or I can go out another week and see if this thing will respond over the next week or so. Let's price this out. So Coca-Cola is probably not an exciting mover. About a 2% mover, and that's pretty consistent. 2.7, 2.6, 2.5, 2.4, 2.1, less than 2, 2, 2. All right, I'm going to go 2.15. So 0.02 2.15 is a 2.15% move times the stock price at 69.41. We're looking at a whopping $1.49. This actually might not be a good trade because the spreads, I need like 50-cent spreads to take this trade if I want to make it worth my trade. So let's go KO. If it went out to this week, they're dollar spreads. If I buy the 69 and sell the 70, I pay 50 cents to make 50 cents. If we're trading at 69.42, we're expecting to see a move of about $1.49. I don't think we're going to get that. We'd have to have we'd have to have the entire move get above 77, and that would be, we get basically $67 of profit for 30 cents risk. I don't mind that trade. The problem is I don't know if it's going to move enough. So I guess the question is, if I went out to Friday, let me see what this thing does consistently post earnings. So 2%, let's see how many times it gets to 2.15% or higher. And if I went out to next week, that'd be roughly the 8-day expiration. How many times did 2+%? Well, we get day 5, we get 3.52, so that one does the work. This one does not. This one does not. This one does. This one does not. This one does not. This one gets to the downside at 2.28. This one does. This one does, and this one does. Okay, not bad. So 6 for 4. So 6 yeses, 4 nos. So I think what that tells me is, can I get a pop to the upside on Coca-Cola out another week? So instead of going to the 25th, let me go to the 1st. If I buy the 69, sell the 70, I pay 54 cents. If I go one strike higher, I really wish this was a 40-cent, or I'm sorry, a 50-cent strike. So if I went from 69 to 69.50 to 70 to 70.50, that's a lot easier to take this trade, considering the move is only expected to be about $1.50. You can see here market makers going on an extra week is $1.75. So if we were to move $1.75 from current price, 175 plus 69.39, that puts me up to 71.14, which is enough to get this bull call spread to be in profit. Now, the nice thing here is we don't necessarily need price to get above 71, but that's the easy way to manage this trade. If I take this trade right now, I pay 37 cents and I get 63 cents profit. So if we have this, let's say we have the whole trade. If we close out for 62 cents and we're divided that by the risk of 38, we're getting 163% return on risk. It's not too bad. Okay. So I think the trade is worth it. I mean, it's cheap enough. It's cheap enough. I'll take the trade. So I'm going to risk about $100 on here so I can make 183 and I'm risking 117. I'm going to pay about 37 to 38 cents debit for this bull call spread on Coca-Cola. I want to see if the price itself for this week and next week, if we just have a good print on Coca-Cola. Now, I don't know what the earnings are going to be. There's obviously lots of structure in here. I will say this. If I take a loss on Coca-Cola and price is lower, I'm probably more interested in this being a few contracts and then using trade sizing to get in for maybe 3 to 4 contracts and get a better dip and then play it a little bit more long-term. That makes sense? So I'm going to see if we have a decent earnings on Coca-Cola. I guess if we have good earnings, that's fine. If we have the overall market that is pulling back, that's probably going to drag on a little bit. I'd like to see Coca-Cola do fine. Earnings-wise, it's been pretty much solid, steady earnings forever, plus a dividend, as we know. Dividend's not bad, 2.79%, super consistent. Anyway, I'm going to take the trade. It's cheap enough. 38 cents. I'm putting in 3 contracts, risking about $100. If I win, we'll go after 186. The nice thing is here too, is if price goes up, we can, instead of taking the full 186 by the end of expiration, if we're positive on this trade, let's say this is trading for, 58 cents. Okay. Then that's 20 cents a contract times 3. I still make $60 on the trade. That's a partial profit. If it's trading for 68 cents, then I'm making 30 cents times 3. That's $90. So I'd be okay. Anything over like 68 cents credit, I'd probably just protect it if it doesn't look like we're getting a big pop to the upside. But I'm going to take the trade. So a little Coca-Cola, we've had a pullback. That's fine. Let's see if we can get up there. It's cheap enough. Let's see if I get in for 38 cents. Bid mid ask is pretty tight, 38 cents or less. Try to get filled for 37. I'll get a little greedy here. See if this actually takes. So let's go. 37 is not filling. 38 hopefully will fill. That's the mid price. Not filling. 39 is fine, I guess. Filled at 39. Okay. So getting filled at 39. Okay, almost there. Okay, so that is updated. Coca-Cola jumping in here. Little bull call spread. So I bought the 70, sold the 71. And that's a 10 or 11-1 expiration. Is that right? Yes. So I'm going 11-1 expiration. Buy the 70 call. Sell the 71 call. 39 cents debit. And I may manage a partial profit. If we get like a lackluster push to the upside, I might manage it, quickly. But I'll see what price gives us by earnings and by Friday. Otherwise, I hang on to it, and I can reassess the trade size. If we have a bad earnings print on Coca-Cola, it would make some sense to me that we pull back technically into some of these levels here. And I still think after, a nice little trend line and find some dynamic support, we're at the 50 period. If we go 50 and back above it, that's an easy win. We go 50 to 100 or 50 to 200. I still like buying the dips off those levels. So trade, moving average. If we buy the dip off those, I still like this really well supported at like 66. So just saying, if I go to the long-term stuff, let's go to Coca-Cola here, see if it's fair value or not. Insider selling, dividend, debt, price to earnings, price to sales. Okay, so fair market value is higher, which I like. Discounted cash flow model is looking good. Compared to peers, what's its price to earnings? So Coca-Cola 28.1, we got peers at 24.2. PepsiCo, Keurig Dr. Pepper. What is this one? 86 versus 186. KOF, undervalued compared to fair value. Interesting. What's KOF? Is that a non-US? Let's see what this one is. Yeah, Mexico, Central America, South America segments. Okay, that's the non-US version. Got it. So this one, I don't know. We got a lot of indecision. I wouldn't mind watching this one pull back into like the 80s. I think it's the same idea. Good support, good structure. I mean, fundamentally, it looks pretty strong. I just want to see if it pulls back. So let me see if I get someone back into like $82. Not a trade for right now, but an upcoming trade if it comes back to a price that I'm interested in. And then we'll see what KO gives us. Okay, so let's go after the screenshots. There we go. And I'll get this posted in the Pulver Alerts section. So right here, stocks, KO, 11-1 expiration. If price is greater than $71, we can hold out for full profit. Okay, and then post a screenshot. Okay, that is in. Looking good there. Okay, anything else on the earnings side? That's kind of it from what I saw right here. So tomorrow, earnings wise, I'm going to highlight Coca-Cola now since we're throwing in some participation there. So Boeing, because I own shares, AT&T, I own shares, Coca-Cola doing the bull call spread, Tesla, I have a credit spread, UPS did the bull call spread yesterday, IBM sitting at the highs. I just thought that one, that's kind of the legacy tech in the space right now. It's sitting near all-time highs. I don't know. I'm good like staying out of this one. I don't know what the price is going to do. Let's find out. I mean, is IBM overvalued, undervalued? Not that price really cares right now, but I mean, checks a lot of boxes. That looks great actually, but the stock has ran a ton. Not super expensive. Like this is, I mean, it's performed better than Intel, that's for sure. Still has room to run as far as discounted cash flow model. Let me see what IBM is compared to peers. So IBM cheaper than peers, not bad. All right, I just don't love it at these all-time highs. This thing has been just on a rip since this summer. It's crazy to think that this stock during take profit. Cool, that was easy. So 2 for 2 on the SPX today. Very nice. Profit target hit. Hooray. That we had that, crash essentially from late July into early August. We crashed on the 5th. This stock looks nothing like that. I mean, this summer is like, oh yeah, we pulled back from March to May, and then this thing has just been ripping ever since. So it's interesting how this completely shrugged off everything that the S&P, the Qs did during that August 5th move. So do I want to do anything in IBM? I don't know. I'll price it out. Let's see what we get. So IBM looks decent fundamentally. Let's go to the earnings print here. Symbol IBM. And we're looking at about an 8% move. 7.3, 7.9, 5.75, 5.5, 4.4, 3.4, 4. I don't like all those 3s and 4s. 6.5, 8, 8.8 is the average. I almost think conservatively we would probably go less than that. So market makers, IBM is what day? IBM is after close Wednesday. Okay. So if we go to Friday's expiration, let's expecting about a $12 move. Let me price this out based on the average here of 8.8%. 8.8% times 231.19. So that's a $20 move based on this. I was going to say I would probably cut this in half and go like, that's almost 9%. I'm going to say 4.5 is probably a better expected move, 231.19. So, I mean, 1040 is what I would conservatively measure, and it looks like brokers got it at 12 and a quarter. So anywhere between like 10, I'd say 1050 to 1250 would be the expected move on IBM. So the question is, do I like it enough to trade it? Let's find out. So if I were to, let's see, what I'm curious what the premium is. If I were to sell the 230 call and sell the 230 250 put, I get 1462 on this trade. Whew, premium wise, it's not bad. Could I go out enough? So 30 to 50 and 32 to 12. So if price stays within the expected move, and I don't know if this is the case or not, it's a bit pricey if I'm wrong. I don't know. I'd almost, where's the 21? I almost wonder if we have a bit of a pullback here. I don't know. It doesn't matter. I mean, we've had a big run. It would make sense we get a little bit of a pullback, but Nvidia's at all-time highs again. Netflix made all-time highs. I mean, I don't want to fight this momentum. So Let's see. Good stuff. I see that, Ken. Good stuff, Ken. Francois, same thing. Good profit target on those. Awesome. Anyway, IBM, I'll probably keep it relatively inexpensive. So if I were to do a bear put spread, it's probably gonna be more expensive, to be honest. If I buy the 230 and I sell the 227, again, not terrible. I can risk 115 to make 135 if we have a down move. If I move this up at the money, it's dead even. I risk $1.25. Oh, I don't want that. So risk 140 to make $1.07. I don't want that. So I'd probably have to go one strike out. We're trading at 231. We'd have to go at least $2 to $3. We're expecting about a $10 to $12 move. Let's see. Let me see if I shorten up the expiration. That's out to the 25th. That is Friday. This is Wednesday after market. We have Thursday, Friday to manage this trade. Let me see on the call side. It might be cheaper on the call side. If I buy the 230, $1.25, go one strike out, $1.10 to make $1.40 if we go up. Well, here are my thoughts. I mean, looking at this technically, okay, we have a 21 EMA, a 50 EMA, and a 100. To me, this would make sense that we would at least find our way lower just to see if we, I mean, look at this thing. This thing has only touched a 21 once in the last like 5 months on the daily chart. So obviously price can do whatever it needs to do. But on the downside, I'm going to see if we can, I don't know, I'll take the trade. Okay, so I'm going to flip this around. I'm going to go put side. I'll buy the 230, sell the 227, try to get in here for about $1.12 to $1.15 max, and see if price wants to push down. Let's see. So $1.12 debit. Hopefully we get filled for $1.12 or less. $1.15 would be my max that I'm going to take on this. So I'm just going to take in a one contract. I'm risking $112 to make 137. I need price to push down below 227 by Friday's close. Okay. All right, so let's see what we get filled at here. So I'll take this trade. This is IBM. Try to go after $1.12, not filling. I'm not taking anything higher than $1.15. $1.13, not filling. $1.14, not filling. $1.15, this is my final offer. This is 3 cents above the mid price. Filled at $1.15. All right, I'll take that trade. Okay, just let me double check and make sure I got all these filled. So 1, 2. That one's not filled. Okay, I need to get this one account. All right, so similar. There we go. All right, this should be everyone's account now. 1, 2, 3, 4, 5, 6, 7, 8. All filled for $1.15. Got it. Okay, so this will be a short position. Going after a tight bear call spread, pull back into this, 21 EMA or 50 EMA. And that is the 230 by 227.50. Buy the 230 put, sell the 227.50 put, $1.15 debit, and 2.50 max credit. So the offset would be we'd make $1.35 to risk $1.15. Taking a stab at that trade right there. I'll throw that in the Discord. Okay. This is a 10/25 expiration. Buy the 230 put, sell the 227.50 put, $1.15 debit, max credit. Just getting it updated in my Pulver alert section, and then we'll do some top-down analysis. Screenshot there. Okay. By the way, how many of you are registered for the November 12th webinar that Nick and I are doing? Hopefully, all of you. I know I been meaning to we need to pop that in every single day. Looking forward to that. There's a lot that we're going to be able to talk about. I mean, this will be post-election, post-Fed, post-non-farm payroll. We'll see where the markets are at. I'm essentially hedging a lot for this time. I think this is a good window to make sure that we're protecting the portfolio if there's any downside pressure. Prices all pretty tight and pretty quiet right now. I mean, this is the SPY going back the last 4 or 5 weeks. So I mean, we have this is the week, right? We're not at highs or lows. Prices inside of this candle. This is last week's low. That's going to be really interesting to see if we break it. If we break it, there's room to drop lower, and there's past resistance back here. I'm not saying that we have to have some massive correction here. I'm just saying a little bit of choppiness and indecision prior to all this. I mean, these catalysts are huge, right? You've got earnings season right now for the next couple weeks where it's like 400, 600, 700 stocks reporting earnings. That's a lot as far as the market breadth and the broadening. I do wonder if this is going to move the needle to drive the market higher, and we just have this melt up even without the election being a major catalyst. I did see something yesterday. I think it was on it was either a brief session with Jordy Visser or maybe it was a Tasty Live segment. But they had said something of there's like a 41% chance that we have a Trump presidency with a Republican sweep. My one warning on the election is the potential impact the market would take if we have a Republican sweep or Democratic sweep. That's where policy shift is going to be affected, right? Policy change is not a good thing for the market. I mean, obviously the market can be like, oh, it's advantageous, but either way, the fiscal spending, the adding to the deficit, the spiraling debt that we have. I mean, our interest expenses right now. I just saw this chart yesterday. Our interest expense is now topping over $1 trillion for the first time in history, just on interest expense. So, I mean, the government doesn't have a lot of wiggle room to cut spending because you have mandatory spending, you have discretionary spending, and then you have now interest expenses. And basically, it's doing this. Your fixed expenses are actually coming down. Your discretionary is going up, and your interest are going up. This is not a good combination. Now, it doesn't mean this is like the top or the end of the US ever, but it's just saying that, look, the government is just spending to oblivion, and the Fed is printing to support it. um, so it doesn't end well, but nobody knows how long this lasts. I mean, if you watched, I actually want to watch this full interview, but Stanley Druckenmiller had a big interview with Bloomberg, I think last week or the week before, and he was talking about the 50 basis points cut that the Fed did, how this possibly equates to a further melt up. And look, Stanley Druckenmiller, if you don't know him, he was the George Soros kind of protege, and this guy made his fortune as a bear. And so I just wonder if he's like salivating right now to see like when it happens, he's going heavy. So if and when it happens, but I don't know. At some point, like bears will probably be proven right. It's just a matter of how committed are they the entire time to be right, or are they able to, ride this melt up higher and then time it later? Who knows? But I want to check that interview out today. Yeah, purchasing power. I've seen that. The cost of a house is essentially level if you pay in gold, but it's cost of housing, the stock market itself compared to the debasing of the dollar. Look, we know it, and this isn't like some conspiracy conversation. We know the dollar and the purchasing power and the debasing continues to happen. This is why gold has been outperforming the indexes this year. This is why silver is staying right there with gold. This is why Bitcoin is up. I mean, all these things are happening. So it's not a bad thing if you're trading alternatives. It is a bad thing if you're wondering, like, how do you stay ahead? And this is why I continue to commit to the process of trading, which at least can offset some of this crazy crap that's going on behind the scenes that we really can't control. I did see also that based on the government debt levels, I think it basically burdens every American with about $103,000 of debt. Every American, if it was like you get to take on government debt, it'd be like $103,000 for every person in the U.S. And that's like, oh, that's not a lot. No, that's a lot. And it's especially when it's going up like $1 trillion every 30 to 45 days. It's to say that it's scary is, I mean, it is, but you just have to wonder like, what's the solution? Nobody knows. I would imagine the solution is going to be a reset, and that reset's going to be painful and atrocious, but it's going to involve everybody. Like we could have, and we had the great financial crisis, we could truly have a great financial reset, where it's just like global debt has to be somehow erased. And I don't know how you do that. Like legally, how do you do that? They don't. People do that. I mean, people can file bankruptcy, but it stays with you forever. I mean, good luck on student loans; they'll follow you to the grave. But as a government, it's like, yeah, do whatever we want. So if all these governments and central banks decide, like, we'll do a great global reset, I don't know what that looks like. You know, is Bitcoin safe? Probably not. Is anything safe? Probably not. But that's pretty scary stuff. So I think there's too much money to be made in the financial markets to have it be like this, end of times. But I just wonder what this creative approach looks like. And I would imagine it's impossible to practice austerity now. Nobody's going to do it. No government's going to do it, right? No politician's going to go to office and say, we're going to balance the budget. It's impossible. So that's not going to happen. Anyway, I just think inevitably something bad's going to happen. The Fed can't fix everything. They've never navigated a soft landing in their career. And even this, I mean, look at the criticism they're getting for the jumbo cut that was in September. That to me, after, it made sense. I mean, I thought 25 basis points was fine, but the market was clearly about to price in some nasty stuff with the SOM rule getting triggered and recessions on the way and unemployment's all of a sudden softening like crazy. And then like a month or two later, it's like, well, look at the Fed. They messed up. And they're still looking to cut in November and still looking to cut in December. I would say this: if the Fed does not cut as the market expects for November, December, if they pause in one of those months, we're probably going to see the market not like it at all. And if they raise, then that's the complete opposite direction that the market wants to see. So that's what we have to be conscious of moving forward with the Fed and how that looks in the next, like, say, 6 months or so. I wouldn't be surprised if the Fed is going to go into some type of pause. Hopefully, they don't have to reverse course and raise rates. That would show they're dead wrong, right? That would show that 12 people have way too much power to dictate this market and basically manipulate where they essentially put the floor in or where they cap things, and they don't know what they're doing. They don't know what the market's doing. Nobody does. So to give them the power to dictate, the Fed does no wrong and don't fight the Fed. Well, if they get it wrong all the time and something breaks and then they come in to fix it, that doesn't mean they're right, you know? So anyway, thoughts of the day. Uh Druckenmiller, yeah, that's correct. Okay, anyway, let's go top down here. We have, let me switch the chart up. Let's go this guy. So SPX. I mean, look, I've got all my moving averages on here: the 21, the 50, the 100. As Frank and I've talked about before, as Nick and I've talked about before, I do like pullbacks. So even if we just slowly, choppily work our way down into a moving average, past resistance becomes support. 21, is that a time to buy? Possibly. The 21 and the 50, is it still well supported? Look at it. It's really well supported. So a little bit of a light dripping to the downside is, I think, fine. Do I think that we like blow these tops off? Not necessarily, but earnings season enough to maybe drive this thing higher. It's a little bit weird to see that earnings season with election coming up and with the Fed and with non-farm, all these things stacked up or that first week in November. I'm not saying that we can't go higher. We certainly can. But to me, after another, we tested, we ripped, we tested, we ripped, we tested, we ripped. I'd like to see if we can test again, right? Any type of test in here. So I'm watching to see, is it possible for some pullbacks? That's all I'm looking for. Okay, so that's SPX, SPY, very similar. See if we get some pullbacks on here. Nasdaq, same thing. Nasdaq had that big push to the upside on Monday the 14th, but we haven't been to those highs since. Our last highs we saw were back in July. Those are all-time highs in the Nasdaq. Similar situation, just a nice controlled pullback. If we have one, 50 and the 100, let's see if we get pops there. So this is the 21, the 50, and the 100. I want to see if we can actually find this trend line. Okay, work our way towards it, find some EMAs, and then look for price to go higher. Okay, I'll get there. I'm on my way. Dow, same thing. Here's your 21, your 50, 100. I'm looking for pullbacks here. Gap lower on the Dow. Russell, holy volatility, man. And it's kind of the same situation. This is still pretty resilient. we're back to the 21. Here's the 50. Here's the 100. So we've had multiple tests where this thing just keeps getting slingshotted off of those moving averages. So, I mean, if we are here, that's fine. If we're pulling back to the 50 period, that's been tested multiple times. I'm going to see if we pull back towards that 50 and then look to go higher. The cause for concern on the Russell would be if the Fed does not cut rates. The Russell is probably not going to have as much of an upside as the market may want it to have. I'd love to see the Russell hit all-time highs. I think to do that, we need to see inflation trend lower, and we need to see the Fed continue to cut rates, right? I don't know what the next forecast looks like. Let me see. Let's actually use Trueflation. That was a pretty good measurement to see what the overall trend is for inflation. I think my concern is that we kind of bottomed out. Oh my God, man, look at this thing. This is not good. I don't like how this measurement looks. So this was when and again, this is a third party reading, but getting this thing all the way down here to 1.5, okay, and now it's up to freaking 2.2. That is a 0.7% increase. Okay. I just want you to imagine for a second, our CPI number that came out was 2.4 year over year. Can you imagine that within a month or so, we get a 2.4 print that then comes into 3% or 3.1? That is not going to be a good reaction by the market. And I'm not saying that's going to happen, but this is clearly bounced. I don't know. It's wild. So we know that CPI came in hotter. We know that PPI came in hotter. Core PCE, I believe, will be at the end of the month before we wrap up the month of October. Oil prices aren't doing much damage. I mean, I think this would be way worse if oil was at 80, 85, 90 with the Middle East stuff going on. But it's not. So that's probably a bonus right now. But man, that right there is not good. I know that China adding stimulus and lifting animal spirits, lifting up PMI numbers, that's inflationary. The Fed cutting consumer spending, that's inflationary. Wages up, labor market steady, that's inflationary. So I don't know. This inflation stuff is not just gone. So I know we said trending lower, but the Fed is going to want to see, as is the market's going to want to see, that our 2.4 is still there or lower, as opposed to we go from 2.4 to 2.6, 2.7, 2.8, 3%. I think that's going backwards. That's going to make the Fed pause real quick. So we'll find out. What else? Gold and silver. VIX. Keep an eye on this one. I might end up doing, I don't know, if we get down to this level here, I might end up doing a bull call spread on the VIX. I might do a long call on the VIX. I just want to see if it comes down low enough. It's still pretty elevated. But yeah, I don't know. We could also see this thing if we melt up in stocks, I mean, the VIX will get through the election and then maybe even end up in the lows. But I would probably be long VIX for Q1. If we're at fresh lows on the VIX going post-election, I'll probably look at a Q1, Q2 that I'll be getting long the VIX. Okay, gold, DXY still ripping higher. There's no sign of the top in the dollar yet. So not calling the top here. I need to see price confirm. Oil hanging in there off that support, but still, I don't know, be cautious. I'm not calling the floor on oil. It makes me pretty uncomfortable at the moment without risk-defined trades. Natural gas, I'd like to see it pull back into my 2 and 160 levels. Gold is just on a mission to be the best performing asset outside of Bitcoin's percentages. But I mean, gold's up like over 40% for the year. Silver's up over 40% for the year. They're outperforming the indexes in a big way, which again is really random, right? You've got gold and silver outperforming. Bitcoin is up. You have debt is growing. You've got the U.S. markets at all-time highs. The Fed's trying to cut rates. Inflation's still sticky. I don't know if anybody can really model this, right? All the history that you want to look at, all the past performance, I don't think anybody can model this scenario and say, like, this is what's happened in the past. It's like, it's hard. It's hard to know, what we've seen like this in the past outside of little bits and pieces, but it's very different. But gold is gold, and I like gold making higher highs. It makes positions look good. Silver making higher highs. I mean, I might as well check. Okay, got some P&L on the day. My positions on GLD. If I go to gold futures, I've already taken a big chunk of profit on gold. Gold futures up another 750. Silver futures still up around. This is up about $10,000 right now. GLD is up around $12,000. SLV is up around, where are you, SLV? Around 43.3. So I have some shares of SLV. I've got a covered call at 35. We still have some wiggle room there from this as the SLV price is at 31.48. Yeah, but I've got some naked puts. I've got some credit spreads. I own some shares. It's up a decent chunk of profit. Let's see it go. So yeah, I mean they're still ripping. I'm still happy with that. Take a look at Bitcoin. Bitcoin is right on the cusp. Can we break? Right? Can we break these recent highs? It was a fake out. I mean, this hit 69,000. That was a bit of a fake out there at 69.5. But if you keep seeing Bitcoin knock at this door at this resistance level, don't be surprised if that's just setting up for a breakout. It wouldn't surprise me. Now, if it's okay, well, that's a ominous candle, and all of a sudden we start pulling back. Well, that's fine. I'd still like Bitcoin at 60 and 52. But if we keep just peppering these highs and we can't necessarily break out, the missing catalyst might be get the election over with, see what the Fed does, see what the job market looks like, see the resiliency. If the melt up continues, look, if global liquidity is increasing, Bitcoin's probably going with it. And if we get to all-time highs, is Bitcoin going up along with Ethereum? Maybe. Is Bitcoin going up with Ethereum and altcoins? Is it just one or the other? I don't know. But if it goes up, good. Okay. So I'm keeping an eye on that one as we keep hitting this resistance level. Let's see how price behaves. And it might just sit here and chop and chop and chop, but eventually look for a breakout. BITO looking better. I want to see this thing get very directional going into 2025. IBIT, not quite at highs. MicroStrategy is just on another planet. It's behaving, better than Bitcoin. But I mean, when do we have earnings on this one? Earnings end of the month. I'm going to probably do something on earnings with MicroStrategy. I've got a lot of income plays down here. It obviously going to blow the top off, but who knows? I might see if it's cheap enough to do like an out of the money bull call, out of the money bear put. See what that does. Ethereum, oh, we're getting closer. 28.14 is what I'm looking for. My ETF here, I need to get back above $60. Let me see what I'm up on the ETF. EETH is right here. Up about $468. Okay. Anything else? Copper. I'm staying out of copper for right now. Nikkei 225 down. Japanese yen down. So weaker Nikkei and weaker Japanese yen. That's interesting. FXY, I don't know. That might be a trade that never pans out. Euro. This is the German market. DAX, FTSE. Gosh, I want to strangle on the FTSE so bad. That like sell above, sell below, just chop this thing up and make some good profit. Mag 7, what do we have? Apple's down today. Amazon's up. We haven't really seen a lot of gains on the Mag 7 other than Netflix's earnings and Nvidia. Netflix, at all-time highs and hanging in there. Nvidia, busted through all-time highs by a couple of dollars. Not momentum that I want to fight, but I would just look at the same moving averages and just wait. Do we get a pullback? That's all I'm really looking for. Tesla trading at 216.89 with earnings tomorrow, I believe. Tomorrow after market. Is it tomorrow or is it Thursday? I guess I look at the chart. There it is. Tesla's after close tomorrow. Okay. So Wednesday after close. Got it. I'm willing to own the shares of Tesla. If we pop back and fill the gap, then that's an easy credit spread. That would be a gap close around 232 or up to 238. If we print, solid earnings, even if we have a bad print in earnings and we gap lower, I mean, we know that Tesla, when it's beat down, it can move a lot. So I'll use that long put to potentially take some ownership anywhere in here and then just repair this thing. My goal is if I have to own it and repair it, I'm going to try to make $500 to $1,000 on the trade. That's the goal. All right. Bonds. So this is your treasury bond going lower. Your rates flat. The 10-year is still, my gosh, man, this freaking 10-year is just on a mission. Look at that. Almost 60 basis points higher since the Fed. Crazy. Mortgage at 6.4. We're still disinverted on the 10 and the 2. All right, let me take a look at China here. Stabilizing the Hang Seng. Alibaba stabilizing around that 382. Baidu's had a big pullback, but we're stabilizing here. Looks like around the 70% zone. FXI stabilizing here. Let me check on FXI. I think I have. I'm going to check this one. I don't think it's able to close out. I took 57 cents credit, 27 cents. I want to check on those really quickly. K-Web looking a little bit better. I'm trying to get this one called away at 35. JD back to 40.83. This is good. I've got a call that I rolled down to 42, I believe. Let me check on JD for a moment. So I've got my shares. I've got the income trade. I'm getting it called away at 42 by next Friday, not this Friday. If it gets up there, that's fine. I'm trying to think what I make on this one. If I flip it, I think I make like $600 or $700 per account. So let me go tracker, JD. Is anybody in the JD trade with me? Whether you took 100 shares, I did 500 shares. But let me see. So I own the shares break even at 40.82. So if it gets called away at 42, I make $1.18, and that's for 500 shares. So $1.18 times 500 shares, I make 590 at 590 per account. So 590, and 3 accounts own it. So a little bit of cash there. And then I also have some income plays on JD. I closed out the shares. We bought them at like 32.50. I closed it out at $45. That was a nice little gain. Now it's just a bunch of puts and a little income trade in that buy right that I did. So, all right, that's looking better though. That's looking a lot better. I'm going to set a, I'll move this chart along. That's fine. I'll monitor this one. Okay, that's good. All right. I don't know if I've got anybody else coming up after me, but I've got, I'll take some requests. I can go a few more minutes before we wrap things up. Let me double check a couple of things. Okay, should be good. All right, let me take some requests. Any charts, anything you want me to go through? I didn't do a lot of currencies. Let's take a look. I just like to spot check the Swiss pairs. Chop City there, still holding and collecting some swap. CAD Swiss is fine. I'd like to see if this will either this, to me, it's like I'm going to hold tight on a lot of these Swiss pairs. If the CAD Swiss, for example, tests this flash crash double bottom, I love this trade for a buy to get us all the way back up to this level. And there's a beautiful pocket right there around 6,500. So this could still be a great trade that you look, just stay patient because either this trade is 1, 2 consolidation and then 3 is coming, or this is the flash crash low. Price wants to come back and retest that flash crash low and then work its way back up to the center high and then double that move. And that's your profit target. Either way, I am staying the course on this CAD Swiss. I'll get whatever swap I can. I still like the technicals on it. We've got pockets galore, and that's not even the big pocket. I mean, that's fine getting back to like 65, but I'm looking way the heck back here at like 71 as well. I mean, that's greedy. If I get it at 65, I'm fine with that. Anyway, that's that. Swiss yen still in a bit of a drawdown there. Nothing crazy. Let's go Euro Swiss. No real direction. Same type of thing. This might pull back and retest, right? If it's choppy and it holds here, that's fine. And it just builds. And maybe it hangs out here, hangs out here. If it breaks and goes lower, watch for another double bottom. But we also have this area as a potential double bottom already. So I'm looking to see, if this holds, and then gets our way back up to about parity, 1.00. Still holding for that. Pound Swiss, still hanging on to see if we revisit, 16 and change. My target in this one that I'm holding long is 1.1950, 1.20. New Zealand Swiss, still hanging on to this one. Same thing. If we test the flash crash lows, I'm still going to hold long. Otherwise, this is a 1, 2, looking to see if we push up to symmetry at 55.50. Dollar Swiss has been one of the best performing ones. I keep saying this, but if I'm long on the dollar Swiss, I'm closing out everything at 9,200. Everything. That's going back to literally the trades from 2023. Everything I'm holding on the dollar Swiss, I'll close out at 92. So that will be worth a lot of profit, a lot of money, but I'm going to be patient until we get there. We'll see. Euro dollar is going to be just like the dollar index. So euro dollar continues to fall as the dollar index continues to rally. And we came back and we filled that big pocket on the euro dollar. So I can go ahead and get rid of that. Now, I mean, ideally, I'd like to see the euro dollar do this. It might as well just try to make its way back down. Now, it could. This is what I'd like to see. I'd like to see it just come back down to a horizontal support level and we can buy it low. That's what I'd like to see. A dollar, 106, 105. I'd love to see that be a level that we can bounce and just trade a range, get back to like 109 or so, halfway to that range. Or I mean, I can see this higher low scenario. If the euro dollar turns here, then we look at that trade and there's a pocket to fill right around 110. So there might be about a 200 pip trade on the euro dollar. I'd like to do this. If I were to say it's good enough to kind of dollar cost average into it. So maybe now's not a bad stab. Like 108 is not a bad stab. But if I bought it at 108, I would have to be willing to also buy it at 107 and 106. And the reason why is this is much stronger support if you look at this chart than this 108. Okay. So if we turn here, we go to 110, that's a good trade. So we can have some participation in the trade. If I buy it at 107 and 106, I'd still take it back to, let's say, break even on trade 1 and then winner on trade 2 and 3. I like that trade. So I think I'm going to actually do that. I'm going to do this with some small trade sizes, but I think I'm going to scale into this. I don't love the 108, but I do like this pocket. If I go to the smaller time frame, I'm going to go to the 1 hour chart here. I mean, that pocket's pretty noticeable. So how about this? I don't see the structure yet on the 1 hour time frame, but you can see the pocket I'm trying to trade back towards. So I will do this. I will look for a trade to confirm if we get above, these moving averages. If we go a little bit lower, I mean, I'm just going to keep an eye on this one. So rather than calling the bottom here, I think that's a little silly. But if we are going to keep going a little bit lower, I'll just wait. But if I see this thing starting to turn up, then I'll probably take a small trade in and then level in at the zeros, 107, 106, and I'm going to target this pocket. So I'll be watching this for a potential entry, 1, 2, and 3, and then try to get it back into this pocket area. Or even if I take 3 trades, this one's break even, this one's profit, this one's profit, I'll take profit there. So I'll keep an eye on that one. Okay. Alibaba, I see that request as well. Sure, Alibaba, take a look at that. Alibaba at 101. I do have some shares on this one. I've got it covered as well. The highs recently were 118. I want to say maybe I can get out of some of these. Let me see what my covered calls are worth. So Alibaba, I have some shares. I've got some credit spreads. I've got some ratio spreads. I've got a lot of positions on Alibaba. Right now, I'm up about $11,000 on Alibaba. What I'm looking for is on some of my, let's see here. I mean, my ratio spreads 92.5% in profit. I could probably close it out at any point and just reallocate the capital. That might not be a bad play. Just grab some income. And then the shares themselves are up a decent amount. So, yeah, that's not too bad. Baidu is a little bit more volatile. This one's actually down, but I do have the shares covered, and I want to see what my profit is. So, right now, my covered shares, covered shares, covered shares, covered shares, covered shares. So, I've got about 81, 85, 83, and 85% of the max profit on these shares out to December. So, if I can get this up to like 90 to 95% of the profit, I'll probably bail on these and take them off and have them uncovered. And then I could be a little bit more aggressive on either lowering the cost basis closer to the current price, or I just, don't have it covered and let the price run as is. And I don't shortcut any profits. So yeah, I mean, I've got a lot of those trades in there. So I'm watching the 110 by 105. That is a credit spread. That's just an income play. If it works, it works. I was interested in more shares, but I think after already having I've got, I don't know. Oh, I know why I have 111 because I had partial shares and I got assigned on a credit spread I'm keeping. So I think right now that's 1, 3, 4, 5, 6, 7, 8, 9. I've got 900 shares of Baidu in my portfolio. I don't need much more than that. I'm good with that. Almost having 1,000 shares, and I'm just going to try to work it to a nice little profit. So yeah, that's it. Dow Jones. Okay. Dow is sitting at 42.8. We had a gap lower down about 0.25% today. I mean, take a look at our moving averages. Here's the 21, 50, and 100. I just think the markets are very, very capable of, a little bit of a topping candle, rounding out here. It might chop at the highs. I don't know. Here's what I'd like to see. Now, what I'd like to see and what the market does could be two different things. But prior to the election, I'd love to see that prices pulled back and we can get through the election and then the market's interested in going higher. What I don't necessarily love would be if we're higher, higher, higher going into the election and it's like, well, do you just buy the highs? Maybe, but that feels a little uglier to me than actually having price stop for a second, pull back into levels where buyers are actually interested. So there's some participation to push this thing higher. Because right now it feels like there's no sellers and there's no buyers. And this is just like the momentum's been established and it's just drifting. And it's drifting and it's drifting and it's drifting and it's drifting and it's drifting. And that's fine. And we can drift and we can stay in orbit for a while. But eventually, when there's heavy amounts of profit taking, those corrections get really sharp. So I don't know. I mean, I'd like to see a pullback to see if the bulls are interested in actually pushing this thing higher by the end of the year. And usually we do see, like, right up into the election, we'll see a little bit of choppiness or even pullbacks through October, early November. So I'd like to see a 21 or 50 EMA hit. That's on all these indexes. So the Russell, same thing. We hit the 50 or the 100. The Qs, same thing. The 21, the 50 or the 100. The SPY, the same thing. The 21, the 50, 100. It's like, just give me something, man. Give me a pullback, right? Okay. All right. That being said, everybody, I think I'll go ahead and wrap it up there for today's sesh. And that's it. Happy Tuesday, yeah? Yep, happy Tuesday. And we'll be back at it tomorrow. All right, thanks, everybody. Take care. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.